What is happening in the markets right now? The pace of change is relentless, and if you're not plugged in, you're missing out. Today, we're diving deep into a seismic shift that could redefine the entire financial landscape. Get ready for insights that will keep you ahead of the curve, because the news cycle is moving fast, and we've got the unmissable updates you need. From groundbreaking regulatory clarity to surprising capital flows, buckle up, this is Bitcoin Bulletin. First up, we're dissecting the profound strategic implications of new legal clarity emerging for Bitcoin Treasury firms. This isn't just about rules, it's about the very foundation upon which these companies operate and how it shapes their future strategies. We'll break down what this means for stability, innovation, and the broader ecosystem. You won't want to miss this. Then, we're investigating a fascinating whale migration. Are Bitcoin whales strategically shifting their massive holdings to Ethereum? This potential exodus could be a massive catalyst for ETH's bullish momentum. We'll explore the why and the what behind this significant market behavior and what it signals for the future of both assets. Finally, we're looking at the broader impact of crypto accounting rules on corporate Bitcoin strategies. How do these new guidelines affect how companies manage their digital assets on their balance sheets? We'll unpack the details and what it means for the future of corporate crypto adoption. Stay locked in and make sure you're subscribed and have that notification bell on so you never miss a beat. Legal clarity unleashed. The financial world is abuzz with the recent emergence of significant legal clarity for firms managing Bitcoin treasuries. This development marks a pivotal moment, moving beyond speculative whispers to concrete regulatory frameworks that will shape how these entities operate. For years, businesses holding Bitcoin as a treasury asset have navigated a complex and often ambiguous legal landscape. The lack of clear guidelines created uncertainty, impacting everything from operational procedures to long-term strategic planning. Now, with a clearer legal path forward, these firms can build more robust infrastructures, attract greater institutional investment, and innovate with a newfound sense of security. This clarity is expected to streamline compliance, reduce legal risks, and potentially unlock new avenues for growth and product development within the digital asset space. It signals a maturation of the market, bringing it closer to traditional financial systems and fostering greater confidence among both corporate treasurers and regulatory bodies. The strategic implications are vast, potentially leading to increased adoption of Bitcoin as a treasury reserve asset by a wider range of corporations as the perceived risks diminish. This could foster a more stable and predictable environment for Bitcoin-related financial services, encouraging further development and integration into the global financial architecture. This clarity is poised to significantly influence how companies approach their digital asset reserves, potentially leading to a surge in institutional adoption and innovation in treasury management solutions. But the story of regulatory impact doesn't end here. Next, we're diving into a surprising shift in capital flows that could reshape the altcoin landscape. Whale watch the Ethereum shift. Whispers in the cryptosphere are growing louder, suggesting a significant strategic pivot among major Bitcoin holders, often referred to as whales. The narrative gaining traction is that these influential players are increasingly moving substantial amounts of Bitcoin to acquire Ethereum. This potential migration isn't just a casual reallocation of assets. It represents a calculated strategic shift that could have profound implications for the future trajectory of both cryptocurrencies. For Bitcoin, a mass exodus of whale capital could signal a cooling of interest or a perceived lack of immediate upside, potentially leading to price consolidation or even downward pressure. Conversely, for Ethereum, this influx of significant capital could act as a powerful catalyst, fueling its bullish momentum and reinforcing its position as a dominant force in the digital asset market. The reasons behind such a shift are multifaceted. Investors might be attracted by Ethereum's ongoing development, its expanding ecosystem of decentralized applications, dApps, the potential for staking rewards, or the anticipation of future upgrades like further scaling solutions. The perceived utility and growth potential of Ethereum's network might be outweighing the store of value narrative often associated with Bitcoin for these particular whales. This move could also be a response to market conditions, regulatory sentiments, or a belief that Ethereum offers better risk-reward ratios in the current climate. Analysts are closely monitoring these on-chain movements, as they often serve as leading indicators of broader market sentiment and potential price action. The impact on market dynamics could be substantial, potentially altering the dominance ratio between the two largest cryptocurrencies and setting new trends for institutional and large-scale retail investment. The crypto community is buzzing with speculation about these whale movements, with many seeing it as a potential indicator of Ethereum's next major bull run. But is this a temporary trend or a fundamental reevaluation of asset class dominance? We'll explore that next as we uncover why capital might be abandoning Bitcoin for ETH. Capital exodus, Bitcoin to Ethereum. A compelling narrative is emerging from the heart of the digital asset market. Capital appears to be migrating away from Bitcoin and flowing into Ethereum. This isn't just about minor portfolio adjustments. It suggests a strategic reevaluation by investors, potentially signaling a shift in market dominance and investor sentiment. For years, Bitcoin has reigned supreme as the undisputed king of cryptocurrencies, primarily lauded for its scarcity and its role as a digital store of value. However, Ethereum, with its expansive ecosystem, smart contract capabilities, and ongoing technological advancements, is increasingly capturing the attention and, crucially, the capital of institutional investors. Several factors could be driving this trend. Ethereum's recent upgrades, aimed at improving scalability and reducing transaction fees, have enhanced its utility and attractiveness. The growth of decentralized finance, DeFi and non-fungible tokens, NFTs, largely built on the Ethereum blockchain, demonstrates its vibrant ecosystem and real-world application. Furthermore, the potential for staking rewards on Ethereum offers a yield-generating opportunity that Bitcoin, in its current form, does not provide. This could be particularly appealing to institutional players seeking consistent returns. Analysts suggest that while Bitcoin remains a significant player, its narrative as purely a digital gold might be facing competition from Ethereum's more dynamic and utility-driven proposition. This shift in capital allocation could have significant repercussions, potentially leading to a rebalancing of market caps and a reassessment of which digital asset holds the most promise for future growth. It's a complex interplay of technological development, market demand, and investor strategy that is reshaping the cryptocurrency landscape at an unprecedented pace. The market is watching closely as major players seem to be favoring Ethereum's ecosystem, potentially signaling a new era for the second-largest cryptocurrency. But how do the companies actually managing these assets perceive this evolving landscape? We'll explore that in our next segment. Corporate crypto accounting, the new rules. In a move that will significantly impact how businesses manage their digital assets, new crypto accounting rules are set to reshape corporate strategies. These guidelines provide much-needed clarity on how companies should report and account for cryptocurrencies held on their balance sheets, a move that has been long awaited by the financial industry. Previously, the accounting treatment for digital assets was often inconsistent and subject to interpretation, creating a challenging environment for companies looking to integrate cryptocurrencies like Bitcoin into their treasury operations. These new rules aim to standardize practices, offering clearer frameworks for valuation, impairment testing, and the reporting of gains and losses. For corporations holding significant Bitcoin reserves, this means a more predictable and transparent approach to financial reporting. It can alleviate concerns about potential write-downs and provide a clearer picture of a company's financial health in relation to its digital asset holdings. The implications extend beyond mere accounting. They touch upon investor relations, regulatory compliance, and the overall strategic decision-making process for corporate crypto adoption. With clearer accounting standards, companies may feel more confident in disclosing their crypto holdings and exploring further integration into their financial planning. This could foster greater trust among investors and analysts, potentially leading to increased investment in crypto-forward companies. The accounting profession itself is adapting to this new frontier, with specialized knowledge becoming increasingly valuable. Ultimately, these rules are a critical step in bridging the gap between traditional finance and the burgeoning world of digital assets, paving the way for more mainstream corporate involvement. These accounting updates are expected to bring greater transparency and predictability to corporate digital asset management, potentially boosting confidence and adoption. And that brings us to the end of today's deep dive. But before you go, let's recap the biggest stories of the day. All right, everyone, that's a wrap on today's market-moving news. We saw crucial legal clarity emerge for Bitcoin Treasury firms, a potential whale shift from Bitcoin to Ethereum that could ignite ETH's rally, and new accounting rules set to redefine corporate crypto strategies. Don't miss out on what's next. Hit that like button, subscribe to Bitcoin Bulletin for more essential updates, smash that notification bell, and let us know your thoughts in the comments below. Follow us on all social platforms to stay connected. We'll see you next time.